Disclaimer: the Islamic Finance Research podcast draws upon credible public sources, including the Indian Government Budget Report, Indian Economic Survey reports, RBI publications, company annual reports, and analytical platforms such as Screener.in and Ticker Phonology. All content is shared solely for educational purposes within the context of Islamic finance and company research. We do not provide stock tips, investment advice, or buy-sell recommendations. This material should not be considered a substitute for professional financial guidance, nor should it be used as the sole basis for making investment decisions. The Islamic Finance Research podcast is not registered with SEBI and is produced independently by students and researchers in the field of finance. I'm Zayd Haji, the host of the Islamic Finance Research podcast. I am a dedicated student with a deep interest in exploring the intersection of finance and Islamic principles. I am not a finance expert or an Islamic finance scholar, but rather a passionate learner committed to studying, understanding, and sharing insights from credible sources. Through this podcast, I aim to create a platform for thoughtful discussion, research-based exploration, and knowledge exchange in the spirit of continuous learning. Today, let's talk about Aegis Logistics Ltd. This is a Mumbai-based company you'll find listed on the NSE and BSE. They've been around since 1956, and interestingly, they didn't start in logistics at all. Back then, they were making chemicals, but over time, they completely changed direction. By the late 90s, they got into the logistics business, and by 2005, they stopped making chemicals altogether. So what do they do now? In simple terms, Aegis makes sure oil, gas, and certain chemicals get from where they're produced to the people and businesses who need them. They store these products in large terminals, move them through pipelines, fill LPG cylinders, and even run fuel stations under the name Aegis, AutoGas. They work with both big industrial clients like manufacturing companies and regular customers like you and me filling up at their gas stations. And they don't just operate in India, they're also in Singapore handling global sourcing and trading. Their big aim to be the top player in their field while keeping a strong focus on quality, safety, and the environment. Let's take a closer look at Aegis Logistics Ltd. This company has quite an interesting journey. It started back in 1956 under name Atul Drug House, and in those early days it was all about manufacturing chemicals. Fast forward to the late 90s, they made a big shift into logistics, and by 2005, they completely exited chemical manufacturing. Today, Aegis is headquartered in Mumbai and is listed on the BSE, NSE, Ahmedabad Stock Exchange, and Delhi Stock Exchange. They work mainly in the downstream oil and gas sector. Basically, everything that happens after oil and gas are produced, like storage, transportation, and delivery to customers. Their business is spread across 5 main areas: liquid logistics, large-scale storage terminals for bulk liquids, Gas logistics, LPG terminals, bottling plants, pipelines, and fuel stations. EPC services, that's engineering, procurement, and construction projects. Retail LPG Aegis, AutoGas stations for vehicles and homes. Marine services, handling cargo via sea routes. On top of that, they have an international arm in Singapore for sourcing and trading. Their client list is pretty broad, from big industrial companies to everyday customers filling up at their stations. Aegis also has some strong partnerships. They've teamed up with Itochu Corporation from Japan to source LPG more cost effectively. And in 2021, they formed a joint venture with Vopak, the world's leading tank storage company. This deal not only expands their chemical and gas storage capacity, but also opens doors to opportunities in renewable energy. Their vision is simple but ambitious: to be an industry leader by offering great service while keeping quality, safety, and the environment front and center. Now, let's talk about the people steering Aegis Logistics. At the top, we have Raj K. Shandaria, who serves as the chairman and managing director. He's been a key figure in shaping the company's direction. The day-to-day operations are led by Sudha O. Malhotra, the chief executive officer. When it comes to expanding the company's reach and finding new opportunities, that's the role of Rajiv Chauhan, the president of business development. Long-term strategy is handled by Keshav Shenoy, the president of strategic planning. And finally, keeping a close watch on the company's finances is Murad M. Moledina, the chief financial officer. Together, this leadership team drives Aegis' growth, partnerships, and future plans. Before we wrap up on Aegis Logistics, let's look at who owns the company and what makes it stand out. In terms of ownership, the promoters hold the largest chunk at about 58%. Foreign institutional investors, or FIIs, own around 17.65%. The public holds 17.55%. And domestic institutional investors, DIIs, have about 6.7%. Altogether, there are over 62,000 shareholders in the company. Aegis Logistics also holds some important international certifications, and I think it's worth explaining what those actually mean, because they're more than just fancy numbers and letters. First, OHSOS 18001. This stands for Occupational Health and Safety Assessment Series. In simple terms, it's a global standard that says the company takes workplace safety seriously, from protecting employees against accidents to making sure operations are safe for everyone involved. Next, ISO 9001. This is an international quality management standard. If a company is ISO 9001 certified, it means they follow strict systems to ensure their products and services are consistently high quality, and that they're always working to improve. Then there's ISO 14001. This one is all about environmental management. It means the company has systems in place to reduce waste, use resources efficiently, and minimize their impact on the environment. They also have a very strong client base, names you'll instantly recognize: Shell, Reliance, HPCL, BPCL, ONGC, Hindustan Lever, Bombay Dyeing, and more. In fact, they even have direct pipeline connectivity with big customers like HPCL and BPCL, which helps them maintain long-term, steady relationships. So it's clear, Aegis isn't just moving oil and gas. They've built trust, safety, and quality into the very core of their business. So what exactly does Aegis Logistics do? In simple terms, they are one of India's top logistics companies for oil, gas, and chemicals. They run a network of large storage terminals, LPG, that's liquefied petroleum gas, terminals, bottling plants, pipelines, and fuel stations to make sure these products get from the source to the people and businesses who need them. Their business is mostly in the midstream and downstream part of the oil and gas industry. Think of midstream as the transport and storage stage, and downstream as the distribution to customers stage. Aegis handles almost the whole chain, from importing and storing the fuel to delivering it to industrial clients to selling it directly at LPG stations. They have two main segments: liquid logistics. This makes up about 30% of their FY24 profits. They import, export, store, and move liquid chemicals, petroleum products, and even vegetable oils. They have storage terminals at 6 major ports across India: Mumbai, Kandla, Pipavav, Mangalore, Haldia, and Kochi. with a total capacity of over 18 lakh kiloliters. LPG gas segment. This is the bigger one, making up about 70% of their profits. Here Aegis is involved from start to finish, sourcing LPG, storing it, and then distributing it to both industrial and retail customers. They have a total LPG capacity of 1.19 lakh metric tons, and in a year they handle nearly 96 lakh metric tons of LPG. While gas sourcing brings in a lot of revenue, the profit per unit is small because they earn a fixed fee for the service. Within LPG, their retailing business is where margins are the highest. They operate 142 AutoGas stations in 10 states, supply through 290 LPG distributors in 140 cities across 15 states, and run 37 bottling plants. In FY23, they saw a big jump in sales to industrial customers after starting a Kandla LPG terminal, which is helping replace dirtier fuels with cleaner LPG. So whether it's liquid chemicals at a port or LPG for your kitchen or car, Aegis is deeply involved in making sure it all moves smoothly, safely, and on time. Aegis Logistics has built an impressive customer base, big names like Shell, Reliance, HPCL, BPCL, ONGC, Hindustan Unilever, and Bombay Dyeing. One of their strengths is direct pipeline connectivity with major clients like HPCL and BPCL, which not only makes supply more efficient but also helps maintain long-term stable relationships. Now let's talk about one of their big strategic moves, their partnership with Royal Vopak, the world's leading tank storage company. Together they formed a joint venture called Aegis Vopak Terminals Limited. This joint venture handles LPG transmission and bulk liquid storage across all of Aegis ports except Mumbai. In May 2022, Vopak bought a 49% stake in the joint venture by purchasing 4.9 lakh equity shares for about 1,098 crore. Under this partnership, they've launched Project Gati, a massive capital investment plan worth 4,500 crore to be rolled out between 2023 and 2027, aimed at expanding capacity and capabilities. And in June 2023, Aegis sold an additional 13% stake in the joint venture to Vopak for 58 crore, further strengthening that alliance. So beyond just running logistics, Aegis is clearly positioning itself for long-term growth through strategic partnerships and large-scale investments. Let's talk about where Aegis operates and how they're expanding. In their liquid division, they're adding a lot of new storage capacity across multiple ports. Kandla port 80,000 kiloliters of capacity went live in FY24, and another 25,000 kiloliters is coming in FY25. JMPT port 110,000 kiloliters will be commissioned in phases, with full completion expected early FY25. Mangalore port 79,000 kiloliters became operational in FY24, and an additional 71,000 kiloliters will be ready in FY25. Kochi port, they acquired a 16,000 kiloliters liquid storage terminal in FY24 and will add 25,000 kiloliters more in FY25. Haldia port 50,000 kiloliters capacity already completed. Gujarat ammonia storage, a 30,000 kiloliters expansion is planned at an estimated cost of 500 crore to be finished by FY26. Once all of this is done, Aegis' total liquid storage capacity will reach about 2 million kiloliters. In the gas division, two major cryogenic LPG projects are in progress. Pipavav 45,000 metric tons of capacity, Mangalore 85,000 metric tons of capacity. Both will give Aegis a significant boost in their LPG handling and storage capabilities. So we're not just talking about a company maintaining its position. These expansions show they're gearing up for much bigger operations in the next few years. Here are some of the latest updates from Aegis Logistics, and there's been a lot happening. First, they've completed their joint venture with Royal Vopak, which we discussed earlier. They've made 3 acquisitions, adding a total of 110,000 kiloliters of liquid storage at Kandla, Kochi, and Mangalore ports. The Kandla LPG bottling plant is now fully operational. They've also gained a foothold at Mumbai's JMPT port with a new 110,000 kiloliters liquids terminal, their first step in that location. Pipeline connectivity for LPG at Pipavav and Kandla is progressing well. Liquids expansions at Haldia, Kandla, Mangalore and Kochi are complete. The Pipavav LPG bottling plant is also finished. Right now, the company is in the middle of the largest capital expenditure project in its history. The Pipavav jetty can now handle VLGCs. Those are very large gas carriers, meaning bigger shipments and more efficiency. And finally, they've made key merger and acquisition moves, acquiring the Nadella terminal in Mangalore and the Ruchi terminal in Kochi. Overall, it's clear Aegis has been in serious expansion mode, growing capacity, securing infrastructure, and making strategic acquisitions to strengthen their position. Let's rewind a bit and look at some key moments from Aegis history. Now let's walk through some of the major milestones in Aegis logistics journey, from its early years in chemicals to becoming a leader in oil, gas and chemical logistics. In 1997, Aegis formed a joint venture with Perstorp AB to boost production of penteritritol, a chemical used in paints, coatings and lubricants. By 1998, their petrochem division was spun off into a joint venture with Perstorp AB. They merged with Amit Alcohol to cut costs and rolled out major savings programs in their oleochemicals division. In 1999, they took their first big step into energy logistics, commissioning an LPG terminal and moving the petrochemicals division into another joint venture called PACL. 2000 was a big transition year. They expanded their liquid terminal capacity by 40%, entered the LPG marketing business, built a new storage facility, and officially changed their name to Aegis Logistics Ltd. In 2001, they launched Project Millennium, increasing tank storage by 45%, won a tender to build new pipelines and a berth at Mumbai port, and expanded LPG distribution to become a private sector leader. 2002 saw more expansion in liquid terminals, multiple ISO certifications for quality, safety and environment, and new opportunities in LPG distribution. In 2003, they invested in PESEL to cut costs, planned a second liquid logistics site, and set their sights on the growing auto LPG sector. By 2004, Aegis was expanding fast, adding new terminals and tanks, entering propane marketing, starting auto LPG retailing, and shutting down its chemical distribution business to focus on energy logistics. 2005 marked a clear shift toward retail fuels. They launched their first franchised auto LP station, began a major growth program, and upgraded operations at Trombay. In 2006, they expanded liquid logistics to a second site, connected into major oil companies' pipelines, and grew their AutoGas retail presence. They also started planning for more LPG and propane import capacity. 2007 brought acquisitions and scale. They bought the largest private liquid terminal in Kochi, expanded Mumbai port operations, won a contract to manage MRPL's inland tank terminal, opened 10 AutoGas stations with 70 more planned, and expanded propane distribution in Western India under the Aegis AutoGas brand. By 2008, Trombay 2 was complete, boosting capacity by 46%. They acquired the Hai LP terminal, grew AutoGas outlets to 40, planned a new terminal in Haldia, and saw a big jump in propane sales. 2009 saw corporate restructuring. They approved a merger with Tapifinvest India Private Limited, expanded AutoGas retail to 55 outlets, strengthened their national logistics network, and introduced Lean Six Sigma efficiency projects. And then in 2010, they made a game-changing acquisition, buying Shell Gas LPG India to expand their LPG business, formed a strategic alliance with SR Oil Limited, grew their port terminal and gas station network, entered the packed cylinder LPG market under the Paragus brand, upgraded their systems to SAP ERP for better operations. From 1997 to 2010, this timeline shows a clear transformation from a chemical manufacturer to a diversified, fast-growing oil, gas and chemical logistics powerhouse. Now, let's pick up our story from 2011. This was a huge turning point for Aegis. They went big, acquiring Shell Gas India and rebranding as Aegis Gas. Not stopping there, they also took over Hindustan Aegis LPG. And here's where the global game began. They activated an overseas subsidiary to source LPG internationally. Imagine it. They're not just buying and selling locally anymore. They're operating on an international stage. They also struck a deal with APM Terminals for a massive 100-acre storage complex at Pipavav. Plus, they bagged an operations and maintenance contract for the Barath Oman refinery in Madhya Pradesh. By the end of the year, they'd expanded LPG terminal capacity, started supplying propane to big clients, and even laid new pipelines at Kochi for handling larger cargo. 2012 rolled in with new projects. They kicked off the Haldia terminal and were pushing hard on Pipavav Port Phase 1, adding a whopping 120,000 kiloliters of liquid capacity. They secured more original equipment manufacture contracts with national oil companies and launched a whole new marine products business, supplying bunker fuel to ships. Oh, and Singapore got a new Aegis outpost with the birth of Aegis International Marine Services, opening doors to global marine fuels trade. 2013 was about putting steel in the ground. They commissioned a 60,190 kiloliters liquid terminal at Haldia Dock Complex and began building a giant 120,000 kiloliters terminal at Pipavav plus extra LPG storage. Their AutoGas retail network grew to 94 stations. They expanded their industrial distributor base, and government subsidy reforms actually worked in their favor. Greenfield projects, full steam ahead. By 2014, they were firing on all cylinders. New terminals at Haldia and Pipavav went live, and they stretched their service reach to northern and northeastern India, even Nepal. Oh, and they made some smart acquisitions too, snapping up bottling plants in South India to grow their LPG retail footprint. 2015 brought a major international handshake, a joint venture with Japan's Itochu Corporation, selling them a 40% stake in Aegis Group International to boost LPG import business. They also secured land at Kandla port for a new terminal and began building more LPG storage spheres at Pipavav. 2016 was massive. They tripled LPG storage at Pipavav, commissioned a fully refrigerated terminal at Haldia with 25,000 metric tons capacity, expanded the Haldia liquids terminal, and built a new 1 lakh kiloliters terminal at Kandla. Plus, they improved throughput at Mumbai by connecting it to the Arun-Chakam pipeline. 2017 was about execution, completing the Haldia refrigerated LPG terminal, expanding Pipavav's LPG capacity, and moving forward with the Kandla 1 lakh kiloliters project. 2018, more commissioning, more expansion. Haldia's big LPG terminal came online, Pipavav's capacity jumped, Mumbai's throughput improved, and Kandla's 1 lakh kiloliters terminal went live. They even announced a new 25,000 kiloliters terminal at New Mangalore port. By 2019, Aegis was thinking bigger, a massive new LPG terminal at Kandla with 45,000 metric tons capacity, plus expansions at Kandla, Mangalore, and Kochi. Pipavav got even more LPG storage, and Seaload Containers became a full subsidiary. 2020, construction was in full swing. The Kandla LPG terminal broke ground. Liquid storage grew across Kandla, Mangalore, Kochi, and Haldia, and Pipavav added new spheres and a railway gantry. 2021 saw the commissioning of the Pipavav rail gantry, unlocking faster, higher LPG volumes. Mangalore's expansion wrapped up. Kandla's big LG terminal was almost done, and Haldia's expansion started bringing in revenue. On the retail side, they pushed their brands Aegis, Pure Gas, Magna, and Chota Sikandar nationwide. Then came 2022, a year of big deals. They bought CRL Terminals and Friends Group's tank terminals at Kandla, adding 500,000 kiloliters of capacity. They also boosted their stake in Aegis Vopak Terminals to 51%, commissioned Kandla's LPG terminal, and restructured major business units under AVTL. 2023, the Royal Vopak partnership officially kicked in. They launched a 1,750 crore investment blitz for capacity expansions, began building India's largest cryogenic LPG terminal at Mangalore, and operationalized new infrastructure at Kandla, Haldia, and Pipavav. And here we are in 2024 to 2025, still growing. The AVTL joint venture is expanding. Another 1,750 crore program is underway. They've acquired specialized storage terminals in Mangalore and Kochi and commissioned a brand new LPG jetty pipeline at Haldia while starting cryogenic tank construction at Pipavav. From 2011 to now, it's been non-stop growth, bold acquisitions, and massive infrastructure bets setting Aegis up as a true powerhouse in India's energy logistics story. Let's talk money, the lifeblood of any business, and see how Aegis Logistics has performed over the years. If we rewind to 2013, sales were about 3,981 crore. Over the years, they've had their ups and downs, peaking in 2023 at 8,627 crore before dipping to 7,046 crore in 2024. That tells us two things. One, Aegis operates in a market that can be unpredictable, and two, they know how to hit strong highs when the conditions are right. But here's the kicker: while sales have been a bit of a roller coaster, profits have been on a steady climb. From just 35 crore in 2013, net profit has surged to 672 crore in 2024. That's nearly a 20-fold increase in just over a decade, a sign of razor-sharp cost control and operational efficiency. In other words, even if revenue wobbles, they keep more of what they earn. Now let's peek at the balance sheet. In 2013, the company's total assets were worth 1,005 crore. Fast forward to 2024, and that number has exploded to 7,929 crore. That's not random, that's years of aggressive expansion, building terminals, adding storage, upgrading infrastructure. But assets grew in lockstep with liabilities, which means much of this growth was powered by debt. It's a bit like taking a big home loan, risky if you can't pay it back, but smart if the investment generates steady returns. Equity capital, interestingly, has stayed steady around 33-35 crore all these years. That means they didn't go back to shareholders for big cash injections. The growth came from retained earnings and debt financing. Speaking of retained earnings, their reserves have jumped from 276 crore in 2013 to nearly 859 crore in 2024. A sign they've been reinvesting profits back into the business and building a healthy financial cushion. Performance-wise, the long-term picture is impressive. Over the last 10 years, profit has grown at a compound rate of 25% per year, and over the last 3 years, that's jumped to 36%. That's huge. Even the stock price has told a similar story. 36% annual growth over a decade, 38% in the last 3 years, and a jaw-dropping 100% jump in the past year alone. Clearly, investors are paying attention. Return on equity has stayed strong, around 15% long-term, with slight improvements in recent years. That shows they're putting shareholders' money to good use. And operationally, they've been tightening the screws. Debtor days have fallen from 40 to just 26, meaning they get paid faster, improving cash flow. Now, it's not all sunshine. The most recent year saw a sharp 23% drop in sales. That's something to watch. But the fact that profits still grew by 23% in that same period tells us they're not just relying on sales volume, they're running a lean, profitable machine. So the takeaway? Aegis Logistics is a company that's been in growth mode for over a decade, using debt strategically, keeping equity stable, and piling up reserves. Sales might dip in the short term, but their profit engine and the market's confidence in them is still running full throttle. 2013-2024 performance snapshot. Aegis Logistics grew from 3,981 crore in sales and 35 crore profit in 2013 to 7,046 crore sales and 672 crore profit in 2024, with net profit margin improving from less than 1% to 10%. While sales were volatile, peaking in 2023 at 627 crore and dipping minus 23% TTM, profit grew consistently at a 25% compound average growth rate 10 years and 36% compound average growth rate 3 years, thanks to strict cost control and operational efficiency. Assets expanded from 1,005 crore to 7,929 crore, funded mainly by debt and retained earnings, driving infrastructure growth. ROE remained solid at 15-16%, while stock price compound average growth rate hit 36% over 10 years with a 100% jump last year. Key takeaway: despite revenue swings, Aegis transformed into a margin-strong, capital-efficient player, delivering steady ROE and exceptional profit growth, a solid long-term value creator. Let me take you through the journey of Aegis Logistics Ltd. This is a story of resilience and strategic growth. Over the years, Aegis has seen its fair share of highs and lows. Sales have swung up and down, profits have faced pressure, yet every single time, the company has bounced back stronger. What makes this story even more remarkable is the scale of transformation. From modest beginnings, Aegis has grown into one of India's leading players in oil, gas, and chemical logistics. And they didn't just grow sales, they expanded their assets massively, invested in world-class infrastructure, and built long-term partnerships with giants like Shell, Reliance, HCL, and ONGC. Now here's where it gets exciting. Over the past decade, profits have grown consistently at a healthy pace even when sales were a bit rocky. That's not luck, that's operational excellence. And it shows in their stock performance too. A strong track record that's turned heads in the market. Let's break it down with a quick SWOT snapshot. Strengths: industry leadership, loyal big-name clients, and top-tier certifications. ISO 9001 for quality, ISO 1401 for environmental management, and OHAS 18001 for occupational health and safety. Weaknesses: sales volatility and high debt levels. Growth has been aggressive, but it's also been financed heavily through borrowing. Opportunities: big expansion projects at Kandla, Mangalore, and JNPT, plus smart partnerships with Vopak and Itochu, opening doors in chemical storage, LPG sourcing, and even renewable energy. Threats: the usual suspects, market swings, and policy changes that can shake up the oil and gas sector. So what's the big picture? Aegis Logistics is not just surviving in a volatile market, it's building for the future. Yes, they'll have to manage the challenges of debt and market uncertainty. But with strong fundamentals, bold investments, and the ability to adapt quickly, they're positioning themselves as a long-term value creator, and that's the kind of resilience investors like to see. And that's a wrap for today's episode. We took a closer look at Aegis Logistics, a story of resilience, smart strategy, and turning market volatility into long-term growth. It's proof that in business, just like in life, steady vision and adaptability can carry you through the toughest seasons. I'm Zayd Haji, your host here at the IFR Islamic Finance Research podcast channel, a space where we explore how money, values, and meaning can actually coexist in today's fast-paced world. Join our growing community on WhatsApp and Instagram and explore more at zaydhaji.com and zaydalhaji.com. You can also find my full body of work in ebook and paperback formats on Google Play Books, Amazon Kindle, Amazon India, and Flipkart. Until next time, stay thoughtful, stay principled, and may your financial path always reflect your righteous purpose.